Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of March 6th through March 10th, where we'll see if the stock market bears are coming out of hibernation. So thank you again for joining us for part one of our weekly trading game plan for March 6th through March 10th. We'll do our market analysis. We'll talk about our strategies, talk about our stock trading strategies, our options trading strategies, etc. And we'll see what kind of opportunities we can find to make money trading if the stock market bears are coming out of hibernation. So let's get started. So here's our Google document with our notes for part one of our weekly trading game plan. These are publicly accessible. You should find a direct link to the Google document for our notes in the description box below. We store the Google documents for our weekly trading game plan notes in a publicly accessible Google Drive folder, so you can refer back to previous game plan notes, etc. Our notes document includes links to bonus video, links to all the tools that we use, etc. for our weekly trading game plans. Firstly, just a quick announcement that I am currently scheduled to be on Benzinga's and Money Mitch's Start Swing Trading show on Monday, March 6th. His Start Swing Trading show started recently. It's from 3 to 4 p.m. Eastern Time, so please go and subscribe to the Benzinga YouTube channel, hit the bell notification, and please join us in Mitch's and Benzinga's Start Swing Trading show on Monday. And again, I'll be scheduled to appear on that show probably around 3:30. But again, there aren't a whole lot of swing trading shows out there, so it's a great show. So I look forward to seeing you all. And again, please subscribe to Benzinga and hit the bell notification so that you're notified when Mitch is on his Start Swing Trading show. Also, you can frequently find me in the live chat in the pre-market prep show that starts at 8, and also the live trading show, which is more day trading focused, but I'm often in the chat from 9 to 11 most days. So again, come join us for those in the morning as well. Good morning, The Blind Trader. Thank you for joining us. Easy Mike, Ricky Khan. Thank you all for joining us in the live chat. Hope you all had a good trading week and are doing well. So let's see how the markets ended up on Friday. I know there was what I will, in my humble opinion, again, this is not financial advice. I'm not a financial advisor. This is for education and entertainment purposes only, as is all of our videos. And these are my opinions in general. But again, Thursday, Friday, in my humble opinion, I think we saw irrational exuberance after one of the Fed officials kind of leaned towards maybe just a 25 basis point hike after a lot of the economic data that we'll look at seemed to indicate maybe they need to go 50, and there was talk of a 50 basis point hike. And then when I think it was Bostic came out and was kind of leaning towards a 25, we saw a big jump in the market, and then that carried in through Friday. So again, the indices we see were all up plus over 1%. NASDAQ, they ran tech. Again, this is that irrational exuberance we've been talking about for quite some time. And we've been talking about how to take advantage and make money trading this. So again, Friday, I think, was a little bit anomalous. Earlier in the week, most things were down. So we saw a real reversal on Thursday, Friday. We got more advancers, 78%, a bunch of new highs, 73%. Now we've got, just over 50%, almost 55 above their 50-day moving average, and a little over 50 above their 200. And yet it's still showing a little bearish towards the end. Good morning, Ollie in the Bay. Thank you also for joining us. Good to see you as well. So again, in the heat map, you see a focus on FANG. We saw Tesla bounce back after it had been declining after their investor day. So a lot of green on Friday, which again was quite a reversal from earlier in the week. So some of the news. Year 3, we talked about this in our election cycle videos. Year 3 is typically bullish. Stock rise after services data. We'll look at the services data. We'll talk about a little bit about the Bitcoin situation. We also had some interesting behavior in oil, and we'll see that in the futures. I think it was Friday. Someone came out, Wall Street Journal, I think, came out and said the UAE was talking about leaving OPEC because they wanted to pump more oil. And then so crude oil prices dropped on that. And then they bounced back after someone from the UAE, insider from the UAE, refuted that. So again, now we see oil's touching up around that 80, and again we'll see that in the future, and I'll talk about what I think is going on with oil. Again, natural gas has been a long time upward trend now, and again, my humble opinion, the trend's up, and now we see it's up over 3. So again, we'll see that in the futures, and we'll talk a little bit about how we're playing natural gas. Gold also made a recovery. It was holding around that 1840, didn't break down below 1840, and now we saw a nice bounce there. And we see all the indices are pointing up right now. The dollar weakened some, and so we see the euro's back about 106. Part of the reason I say this behavior, particularly in technology, is irrational exuberance, as we saw the Treasury, particularly the 10-year Treasury, push up over 4%. Usually that's bad for growth stocks. Usually growth stocks, the NASDAQ goes down when the Treasury pushes over 4. We can see it's still hovering around 4, and yet we had that exuberant run in technology. So again, in my humble opinion, that's, counterintuitive. So let's look at the groups, the sectors, the industries. I thought this was quite interesting as well, is the sector rotation. Again, we've been talking about this for weeks. I think this is a primary area of opportunity right now when we're in a range-bound kind of choppy market, is watching these sector rotations, is giving you an opportunity. Again, on Friday, we see that irrational exuberance into technology and consumer cyclicals, which, isn't really in line with higher interest rates, still high inflation, potential recession. So I don't expect that to hold. So I expect a rotation back out of those. We've seen basic materials and real estate are starting to recover. We talked about that as an opportunity. We see energy starting to recover. So you see them moving up the sector list on Friday, also for the week. We see basic materials now was the top performer for the week. It was the worst performer a couple weeks ago. And again, we see it moving up the list. Same thing with real estate and energy. So I like to look at the long-term strength, what's the long-term trend, the long-term strength, and then where is the rotation moving? So we see energy's moving up. So basic materials is moving up. And is strong for the quarter. So again, we're going to be looking at watching that sector rotation. Now, if we jump to industries, we've seen the same type of thing. So again, we see this sector rotation into solar. So we've talked about in and out of solar. Now silver's strong. We'll see in the futures, silver bounced off that 20 area. I think it's back over 21 again. Again, coal, sector rotation to coal. I saw EC Mike talking about into copper. So again, your basic materials, aluminum, we've seen that sector rotation in and out of aluminum. Again, opportunities. So right now, those are high. I would expect, a profit taking in solar and then rotate out of solar and then back into solar. So same thing with coal. Isn't a whole lot in the down sectors for Friday. Again, solar was strong for the week. Solar, coal, steel was strong, silver, etc. So basic materials. You can see gold's got some room, so it could move up. So we'll see maybe if gold starts to catch up. Uranium's still up a little bit near term. Same thing for the month. Coal still strong. Steel. But again, now silver and gold are down the list a bit, so I think there's still plenty of opportunity in those areas for a longer term. So silver and gold longer term. we're at the bottom. So again, rotation into silver gold, I think, is an opportunity. Okay, so I'll bring up the economic calendar and then look at some of my comments on some of the releases of economic data, and then we'll see what's coming up. I'll grab a drink set. See, Easy Mike says he's waiting for a breakout DBA, which is an agricultural ETF. We'll look at that tomorrow when we look at all of our ETFs. We'll see all the agricultural commodities have been pretty volatile when we look at the futures. So we'll see Monday, Tuesday, Wednesday. I didn't really capture anything. Thursday was interesting because the jobless claims came out, and you could see it was a little bit, the continuing is weaker than expected. The initial was weaker than expected. So again, the job market remains strong, and we've been saying that for a while, which again is impetus for the Fed to be more hawkish. Unit labor costs were very high, so wage inflation is still high. So all of those again say the Fed can and maybe should be more hawkish, and yet then when we heard those comments from, I think it was Bostic again, leaning towards a potential 25, then the market started to run. So again, it's again my humble opinion is contrary to the data, but that doesn't matter when they really want to run, particularly technology. So when it takes off, we had a Thursday, Friday run in technology. We see the natural gas storage was down much more than expected, but again, as I've been saying for several weeks, I don't think oil and natural gas are trading as much on the data as they are just technically and on general sentiment and trend. So we'll see that as well. So let's see what else happened in the economic calendar. Let me zoom this up a little bit so we can see it better. So we got durable goods orders a little better than expected. Home sales was up for January. Again, the mortgage rate's been fluctuating. So January was up. Then I heard now it's down again. Home prices still high. Crude oil production here for OPEC was pretty much in line. Wednesday, so mortgages went up again. We again have a lot of these Fed speakers, and they're causing volatility in the market depending on which way they're leaning. So every time we have one of these Fed speakers come out, I believe that Powell has a Congress hearing this week, and we'll see that in the calendar, and that will cause volatility based on what does he say. Now I expect he's going to say what they have been saying, which is inflation's still unacceptably high. They have more work to do. Rates higher for longer, etc. Now, are they going to go 50 the next meeting? Maybe, maybe not. But they're still talking a mid 5 to 6% terminal rate, and a pause wouldn't occur till late summer. Is what I'm hearing. Again, crude oil inventories, we had quite a bit of a build, which would, tend to drive prices down, and yet now we're touching up above 80 again. So again, I don't think and I didn't see much of a reaction either in the natural gas or the oil data. Again, I think it's technical and sentiment based. So again, then we see the jobs data. I thought this was kind of interesting too, is that car sales were down. So again, I thought that was kind of interesting. That's kind of, tends to say, okay, people have stopped buying cars. So we got services and non-manufacturing ISM pretty much in line. PMI pretty much in line. Again, more Fed speakers. Let's see what we've got coming up for next week. So durable goods. So again, some indication of recession, strength of the economy. Okay, so Tuesday morning, 10 a.m. is Fed Chair Powell's testimony. So again, there's an opportunity for volatility right there. Just listen to what Powell has to say, and the market's going to be carefully listening. And any indication as to are they going to go faster? Are they going to go 50? Are they going to stick to 25s? When are they going to pause? What are they going to do after they pause? Again, I expect higher for longer. That's what they keep saying. Probably, and the terminal rate's probably going to be mid 5s to 6. So it's just, but the market's going to react. So volatility and a reaction based on that. Consumer credit's been, growing rapidly. There's a lot of discussion about the, concerns about that. Mortgages, import-export, JOLTS, that's open jobs. So it's expected to decline. We'll see. Oil. Beige book, again, more notes from the Fed that everybody's going to be looking for any indication, if they're going to go 25 again. Another reason I thought this rally was irrational exuberance is, they've been expecting a 25 and then they were fearing a 50. And when it came back, the probability of just a 25, they rallied it. So it was kind of as expected. Why would we get a rally off of that? So we get payroll data on Friday. So again, that will be closely watched as to, is the job market still strong? I expect it to still be strong. So we'll get rig counts. So again, several data points that potential for causing volatility, as well as, some sharp rallies or sharp dips depending on if the market gets what they want or not. And again, we've been talking about this battle between the market and the Fed. The market wants to go up, and they're not necessarily listening that interest rates are going to keep going up. They're going to stay high for longer. Whether we end up in a recession, and if so, how deep, is yet to be seen. But there aren't any indications that we're in a recession yet right now. So earnings, we're still got plenty of earnings. So Nutanix, that's a hyperscaler, hardware, data center type thing. Got some payments, some solar related. So see what indication that it has on solar. Again, keep an eye on, who's reporting, what sectors, how do they relate to stocks you're looking to buy, or sympathy plays, same sector. Again, earnings matter. So again, I'll let you peruse the long list. See, I'll show you the shorter list in a second. But we're still deep in earnings, so that will cause additional volatility as well. Again, as there's some biotechs. Again, watch for the algos to trigger off the headline number, and then you could get a reversal of that reaction when they come out with their guidance in their earning call. So it's worth listening to that, or getting the output from their guidance and their earnings call. Next FOMC meeting, the next Fed meeting is March 21st to 22nd. So again, every data point, people are on the edge of their seat as to whether they're going to go 25, 50. The probabilities are oscillating based on, that sentiment. We talked about earnings still matter. So you can listen to our video on, how we play earnings, how we look for irrational reactions to earnings, and take advantage of that. Good morning, Bourne. Again, thank you also for joining us. Glad to see you. Hope you all are doing well. Okay, also we've got now earnings reports, so I'll show you both. The economic data gets posted to a Surf the Markets channel in our Discord. And we now also have an earnings report channel in our Discord. So as economic data comes out, I try to post it in the Surf the Markets channel in our Discord as soon as I can. You can see the raw data, snapshot, a link to investing.com. We also have a feed for Market Watch Economy, so interpretation of this data is automatically posted there. So again, there's an invite to our Discord in the description box below. Again, we also have an earnings report, so as earnings come out, they get automatically posted to the earnings report channel. So we hope that helps. So again, join our Discord. We've got a great community of traders. It's free to join. Again, you can get the earnings data and economic data quickly in our Discord. Good morning, Walter Lyons. Thank you for joining us. Glad to see you as well. So now we'll jump over to Weeble and we'll look at the market screen. Just a quick reminder, if you're not already using Weeble, as you can see, we use Weeble for our market analysis, for our due diligence, for the majority of our trading. If you're not already using Weeble, they're still offering up to 12 free stocks, each worth $3,000 to $3,000. You get 2 for just opening an account, and up to 10 more if you fund your account with any amount. So again, if you're not already using Weeble, we recommend it. We also really like the 4 a.m. to 8 p.m. Trading hours, which I think gives you an advantage, being able to take advantage of opportunities at 4 a.m., which I'm typically up for the 4 a.m. Weeble open, so you can always wave and say hello if you're around 4 a.m. So again, we recommend Weeble. You can at least take your free stocks, cash them out if you don't want to use the platform, and hey, it's free money, right? So I'm on the markets screen in the online browser version of Weeble. I like this to see what's going on in the market overall, as well as, ETFs and industries. So we can see on Friday, we had a lot more advancers than decliners, more than 2 to 1. But the advancers was relatively small. We have a long tail of decliners, so we had some that declined quite a bit. If we look at the inflows, we see that actually the NASDAQ had less inflow and decline towards the day, which is a reversal from what we saw the past couple weeks. So that's interesting given that they ran the NASDAQ. So there may be more upside in the Dow just from the money flow that we're seeing. Another place you can see the near-term earnings calendar, again, is on this markets tab in Weeble. You just hit calendar and earnings. You can also see dividends and splits. And again, you can see what's coming up near term, whether it's before market open. So there's a biotech before market open or after market close. Again, you can see the near-term calendar there and see what's coming up in the very near term. So let's look at the best performing industries for the week. So again, we see coal, metals and mining, some software, construction, transports, renewables. So solar was one of the runners. We'll talk about our solar play tomorrow in part 2 to play that rotation in and out of solar. So again, miners. Another observation that I saw is the miners seem to be lagging a little bit. I saw some of them start to move, some of the silver gold miners, but there may be some opportunity there. Uranium's still kind of high. You see UROI, DNN, so the ones we typically watch for uranium. Hotels, okay. Semiconductors mixed. Chemicals, oil, again, energy. And we saw oil run up to 80, so that strengthened the oil sector. Transport. office equipment, education. I think several of those are Chinese, though. Look at the ETFs. Expect ups. Yep, up on the Dow, up on the S&P, down on the VIX. Again, we saw a pretty precipitous drop in the VIX when they started rallying on Thursday, Friday. Let me see what the VIX is sitting at. I think it's still sitting below 19. So let's see, 1849 right now. So yeah, there was a real precipitous drop in the VIX when they started running the markets, which again is a little counterintuitive. Up on the Russell, up on small cap. We've been talking small mid cap. There's potential opportunity. Up on Europe, again, the weakening dollar prompted the euro to go up some. Industrials, electric vehicles, healthcare, utilities, technology. So almost everything's going to be green from Friday. Healthcare just has a little negativity, but again, from Friday, everything's green. Commodity, again, metals, natural gas, a lot of natural gas, metals, natural gas. Asia, 25 years, so very long, very long. So this is a little bit changed from the previous past couple weeks where we saw the short end of the treasuries were up, and now we're seeing the long end. So the curve's still quite inverted, but maybe we're seeing the long end start to perk up a bit. Yeah, Easy Mike's been talking about MP Materials with the Tesla news, talking about trying to get rare earths out of their batteries, and I think it bounced back some late. So let's look at the futures real quick. So we see again this Thursday, Friday bounce back. It was downtrending, and then we had a dramatic bounce. We'll look at. I want to look at the SPY. Yeah, let me jump over there after we look at the futures. I'll jump and look at the indices in more detail. I kind of skipped over that. So again, all of them Thursday, Friday, they were declining, and then we saw this exuberant rally. So we've been talking for quite some time about bull rallies in a bear market, how to play those, and I do have some references when we get to strategies about we've talked about this before, how to play a bear market, how to make money trading in a bear market, how to play sell the rips in a bear market. So again, I think that's probably what we're now, if we're going to get another day of exuberant rally or not, but eventually I think we're going to get a reversal, particularly if we get data that says, inflation's still high, or a Fed comment that says they're going to be more hawkish. So be prepared. Again, we see that severe decline in the VIX when they started running the market. So you see that drop in the VIX corresponding with the jump in the indices. Here's that pop in oil, the long tail. So that's that UAE news. It dropped down to about 76 and then popped up to about 80. Again, talking about my opinion on oil is you see how it's oscillating around maybe 75, 76 pivot. And you see how these lows and highs are it's higher lows, lower highs, so it's oscillating into a steady state. I have an old physics background, so I look at that and say, oh look, it's a damped force damped harmonic oscillator reaching a new steady state. Well, where's that steady state? 76, 75. But in my opinion, that's my expectation is just continued oscillation around that. new steady state, whether it's 75, 76. I expect, dips. We might get a dip back down to 70, bounce back up to 80, but then oscillation between those points. And we've been talking about that for quite some time. There is no strong trend. Let me grab a drink a second. We'll talk about also natural gas. So again, we still have a short position in oil with drip, but that's again a very long term um, short when oil finally does break down again. But if you want to play these oscillations, gush up, drip down, or UCO up, SCO down, you can do that. So let me grab a drink a sec. Okay, natural gas again. It's trending up. We've been talking about this now for several weeks. But natural gas is very volatile, but again, you can see the trend is up. How far is it going to go up? It's hard to tell. You can see there's a gap to fill here. I wouldn't be at all surprised if it continues upward. It's going to be choppy, but I wouldn't be surprised if it continues upward to at least fill that gap. Again, you can see, when natural gas trends, it tends to trend, and I expect it to continue to trend upward. We closed all of our positions in cold. So cold is the short on natural gas. We now have a position in boil, which is the long on natural gas. Again, we were a little bit early into that. So we're scalping covered calls on our position in boil, just like we did on our position in cold, and we'll continue to do that until that position's profitable. Then we'll ride it up until natural gas reaches wherever it's going to peak out, and then rolls over again and trends down, and then we'll flip. We'll go short with cold again. See, gold had a nice pop on Friday, it's trending up, held that 1840 area. Again, I'd expect it to continue to trend up for a while. Same thing with silver. Saw silver went down, mid 20s, bounced. Now it's up above 21. Again, I'd expect continued trend up for a while. Copper's more flat. We've been looking for this opportunity. Palladium kind of missed the bottom there potentially. It looks like it might be trending up, but if we get a little bit of a retracement, we might go long palladium. Again, Easy Mike was talking about DBA, which is agricultural products. You can see the declines in several of these. Corn, oats, wheat. I was looking at the ETF on wheat to see if that might be at a low, but it's still relatively high, even though it looks like it hit a new low here. But again, we'll look at DBA and some of the agricultural ETFs again. Lumber's been on a roller coaster. And we see the bond prices bounced up, yields declined a bit. Again, they went up to 4, over 4 on Thursday, and then back down a little under 4 on Friday. But again, I expect bond yields to have to be up over 4, maybe in the 4.5 range, which means price is going to decline when that yield pushes back up. And in the meantime, we're going to get some volatility. I see volatility in the dollar. It had run up again, up over 104, up over 105. So let me look at the indices since I skipped over those as well. The SPY, see where we're at. So we're sitting just above the 20 day, where that's the 50. So there's the 50. It's getting support from that. Still below the 200. See, it's using that lower trend line is providing support. It was resistance. It popped up over that, a little bit of a gap. So again, potential reversal there. So again, the 50 support, 50 week moving average providing support. See a hammer candle, which is bullish, so maybe we'll get another day. The moving averages are pretty tight. Q is very similar, just popped up over its 50-week moving average. Filled the gap a little bit. Still hovering, above its longer-term moving average, the 200. So some potential downside there. Again, this is starting to look like an oscillator as well. Dow is getting, really good support from its 50-week moving average. It's been, pretty choppy, pretty flat, pretty range-bound. And again, it looks like it's gaining quite a bit of support from there. Might get a little bit of a pop back up in the Dow. Got Russell. Walter, from what I heard, they are starting to open up, and they're increasing production slowly, relatively slowly. But that's the last I heard. Maybe somebody can comment further or post the news. I think there might even be some news in our Discord about Freeport opening up and starting to produce. So again, the Russell is hovering a little farther above its 50-week moving average, been pretty flat. Again, they're all showing a hammer candle for the week, so those are all bullish indications. So again, we might get a short continuation to that rally. Look at the VIX. Again, we saw a little bit of a pop up. And then Thursday, Friday, pretty sharp, pretty steep decline. It had, made it up in the almost the 23s and then trailed back off pretty quickly. And now it's under 20. So again, 20 is kind of a resistance point. Once it makes it up over 20, 20 becomes a support. So you can see that last run up is when it broke 20, ran up, and then declined pretty rapidly. Okay, so let's talk about our strategies. Some of, we talked about some of our themes, looked at some of the trends. So again, is the stock market bears coming out of hibernation? Well, early in the week, it looked like that was the case. And then, when they got the comments from Bostic, they bears probably went back into hibernation for a couple days at least, while they, wanted to run the market. So that's one of these bull rallies. If we continue to look at the overall trends, let me go back to the SPY, go to the longer term trend. It's pretty range bound, pretty flat. So it's not clear. Are we still in a bear market? We made higher lows, but we haven't made a higher high. We made a relatively recent higher high, and we're above the averages. So, it's unclear as to if we're going to trend back up or trend back down. So again, these guys are starting to look like an oscillator. So maybe we're just trying to reach a steady state somewhere in the middle there. But for your reference, we have a bunch of strategies in our game plan back from last year, how to use the various ETFs, leveraged ETFs to play either side of the market. So you can refer to those, from how to make money in a bear market and also sell the rips in a bear market. I should probably snip those pieces out into individual videos, those strategies, because they've applied pretty much all this past year. How to make money in March. We just released this video, which was a compilation of our previous discussions. We also have short versions of what ChatGPT respond in terms of these questions: how do stock markets perform in March? What's best performing sectors and industries in March? So you can see those shorts, and they're also compiled along with our look at the March as a month in that video as well. We've also been talking about the theme of AI that continues. They continue to run C3 AI, which again, this is all just pure sentiment, pure hype, because C3 AI, it's not based on their fundamentals. And companies keep coming out, throwing AI in their name or throwing it out in their conference calls, and they get a nice pop in their stock based on that. If you're interested in those stocks, ETFs, etc., you can see our videos on how to find AI stocks, how to find AI ETFs, and our comparison of the various AI-related ETFs in our ETF comparison spreadsheet. And again, our All Access and VIP Patreons have access to that spreadsheet all the time. So again, you can see the comparison of AI-related ETFs in these videos and in that spreadsheet. And we've been talking about the hype. The hype continues, so just be careful. Don't get caught up in the hype. There's opportunities to make money, and you can see in these videos on the Gartner hype cycle, how to trade the hype cycle, how to make money on the hype cycle. Also on the technology adoption, you can see where is this technology and the adoption life cycle. Have we crossed the chasm? Is it becoming ubiquitous or not? And then we have series on how to use ChatGPT on our sister channel, the Virtual Consulting 101 channel. So if you're interested in learning more about ChatGPT, how to use it, you can jump over there and see those. Again, I probably should have kept this theme in the description, but when we see that exuberant rally like we're seeing, when people get too greedy, that's the Warren Buffett quote, is, be fearful when people are greedy, and vice versa. So again, you can see more about that in that video. Again, because the markets have been, the indices have been so range bound, so flat, so choppy. Two of our major strategies right now is dividend paying stocks and ETFs while we wait for opportunities for the markets to pick a direction, give us better opportunities for swing trades. We're buying into a variety of dividend paying stocks and getting paid while we wait. So you can see our strategy in this series on how to find the best dividend paying stocks. And again, we have a new Google sheet, new spreadsheet on dividend payers that's automatically updated, and we'll review that in more detail in part 2 tomorrow. Also, our strategy on options, we're, again, another strategy while the market's choppy, range bound, somewhat volatile, is, selling covered calls, buying them back, selling puts, buying them back, and essentially generating our own self-generated dividend via this strategy. So it's part of the wheel strategy. And you can see what is the wheel strategy. We just released a short version of a definition, and then we've got a couple videos on what the wheel strategy is, how you can use it to make money. So again, we continue along those lines. And also, we're looking for opportunities to sell puts. So when the market was declining earlier in the week, we were looking for opportunities to sell puts. When Tesla took a dive after its investor day, we looked for opportunities to sell puts in Tesla. So again, we'll talk about that in more detail tomorrow. We'll review other potential opportunities in our puts ROIC Google Sheet again tomorrow. In the meantime, you can see all of our previously released videos and our options playlists. So you can see, what's our strategy, how we're using this puts ROIC to Google Sheet to generate income, while we wait for other opportunities for swing trades. So let me grab a drink. If anybody has any questions in the chat, I can field those first, and then we can talk about other topics as well. While we have a few minutes, let me grab a drink first. Okay. I don't see any other questions in the chat right now. If you have any questions after watching this video later, you can always ask them in our Discord. Again, our Discord's free to join. Just tag us in the Discord so that we're notified and we can uh, try to respond to your question. You can also put them in the comments below in our Facebook group. You can also contact us directly via social media. We have all our links to our social media on our homepage, which is beachbumtrading.com, bum without the U. We also have links there in the links section to the trading platforms we use, trading tools, a bunch of references. So you can find links to like that Fed monitoring tool, etc. The investing.com site, etc. Non-compliant companies, we added that at fellow BeachBum trader request recently. So again, plenty of ways that you can contact us and ask any further questions, and we'll try to respond as soon as we can. We've been talking about a feed for dividends, and I had added this feed from that Dividend Hikes Twitter account to our investing channel. But unfortunately, you will see not soon after I added that, we were getting some feedback from that. Apparently, they're discontinuing that Twitter account for some period of time. I guess he says he'll be back later this year. So although that was helpful for a few days and we were getting dividend hikes, it looks like we need to find another source of dividend information. So if anyone else has any other dividend related Twitter tweets that you would like us to add to that channel or some other channel in our Discord, or if you have other Twitter tweets, Twitter feeds that you would like to add to our Discord, you can respond to any of these threads below, or we have a suggestion box also in our Discord, so you can always add suggestions in our suggestion box and let us know, how can we improve, our videos, our game plan videos, etc. Anything about our sites, our systems, etc. Just, let us know how we can help you succeed in your trading, make money trading, succeed in your trading career. Just let us know, and we'll try to do what we can to respond to those requests as soon as possible. So, okay, again, if anybody has any further questions, contact us via any of those channels, and we look forward to seeing you in Money Mitch's Benzinga's Start Swing Trading show on Monday afternoon. So again, go subscribe to the Benzinga YouTube channel, get the notifications, and hopefully we'll see you in the show on Monday, and you can hear us interact with Mitch on his swing trading show. So we look forward to seeing you all there as well. And hopefully you'll come back again tomorrow. Same bat time, same bat channel, 10 a.m. Eastern time for part 2. So we will take all this analysis, all this data, and we will select our top swing trading stocks to put on our watch list for the week of March 6th through March 10th. And again, as we pointed out, we'll review our dividend payers, our ETFs, also our puts ROIC spreadsheets, and again, look for opportunities to, all the opportunities we can find to make money next week and going forward. So we hope this all helps. Have a great day, and hopefully, again, we'll see you tomorrow. Bye.